Are you familiar with the different types of installment agreements offered by the IRS? I'm Andrew Bosserman, tax attorney and founder of Boss Tax Law, and in this video I'm going to quickly go over the different types of installment agreements the IRS offers for you to pay your taxes over time. So an installment agreement is an agreement between a taxpayer and the IRS that allows you to pay your taxes over time. It's just one of a few different relief methods the IRS offers if you're unable to pay your taxes in full when they're due. And that's a general rule that you must pay your taxes in full by the due date. But if you can't pay them in full by the due date, the IRS offers installment agreements, which allows you to pay your taxes over time. This is similar to any other sort of debt payments you might have with regular monthly payments. So like a mortgage, or maybe you're paying your credit card off over time, a car loan, any sort of regular loan with fixed monthly payments. So installment agreements with the IRS work similarly, but there are a number of different kinds and it can often lead to confusion. So there are really kind of four main types of installment agreements. The first type is what we call a guaranteed installment agreement. And this is for taxpayers, individual or business, that owe $10,000 or less. And we call this guaranteed because pretty much you're able to get one of these installment agreements, no questions asked. You just call up the IRS, or you can also submit a form, and they'll generally approve you. And you must fully pay your tax debt within 36 months, which is 3 years. So if you owe $10,000 or less and can full pay within 3 years, then a guaranteed installment agreement is a great option. But say you owe more than $10,000 or can't fully pay in 3 years, then you might want to look into a streamlined installment agreement. And this is generally for balances up to $50,000 for individual taxpayers or up to $25,000 for business taxpayers. And it's similar, although the IRS will allow you a little more time. It'll either be the lesser of 72 months, which is 6 years, or the time remaining on the collection statute of limitation. And the statute of limitation is generally 10 years from when the tax is assessed. So it's going to be the shorter of those two periods. So if you, owe generally up to $50,000 for an individual and you're able to fully pay by the lesser of 72 months or the statute of limitations, then you'll generally qualify for a streamlined installment agreement. And the nice thing about both guaranteed installment agreements and streamlined installment agreements is that the IRS requires no financial disclosures, meaning you don't have to share with them your income, your monthly expenses, so they can calculate whether or not you can afford the monthly payment or afford to pay more. But as we'll see with different types of installment agreements, sometimes you do have to make those financial disclosures. So general rule, if you owe $50,000 or less, it's generally pretty easy to get an installment agreement with the IRS. But say you owe over $50,000 if you're an individual or over $25,000 if you're a business, then you may have to look to a non-streamlined installment agreement. And generally, this also gives you 72 months to pay. It can differ a little bit, but you will have to provide financials. So this means disclosing your income, expenses, assets, just so the IRS has a complete picture of what you can afford to pay. And like I said, these are normally for 6 years or 72 months. So balances over $50,000, generally a little more involved to get an installment agreement, but they are available. And in some instances, it can go up to higher amounts where you don't need to provide financials. These are, it's a special type of non-streamlined installment agreement. If you're able to fully pay by the statute of limitations, then there are certain instances where you don't have to provide financials. But in general, for a non-streamlined installment agreement, oftentimes you have to provide financials to the IRS so they can verify the monthly payment amount based on your income and expenses. and that you can afford to make it. But then if you don't, say, qualify for any of those, don't qualify for the guaranteed, the streamlined, or the non-streamlined, then really your remaining option is what's called a partial pay installment agreement. And this is a type of installment agreement where you can't fully pay the balance in full by the statute of limitations date. But the IRS will still get you on an installment agreement to pay as much as you can up until that time. So what happens is that you keep making your monthly payments based on how much you can afford to pay. But then once the statute of limitations expires on collection, then the IRS forgives the remaining amount. So partial pay installment agreements are an excellent option for taxpayers who might be considering an offer in compromise, but might not qualify due to some significant assets or something like that, or other issues. And oftentimes partial pay installment agreements are easier to get than an offer in compromise. It really just depends on the situation. But if you owe a lot of money to the IRS and can't afford to fully pay it off, definitely look into a partial pay installment agreement. The IRS will require financial disclosures for this because they're going to calculate how much you can afford to pay each month, because you're not going to be able to fully pay it off. So they are going to look very closely into this. But I've helped taxpayers qualify for these before, and they can be a great tool if you owe a significant back taxes to the IRS. So in review, there's really four main buckets of installment agreements: guaranteed and streamlined. Those are if you owe less than $50,000 to the IRS for an individual. Generally pretty easy to get without disclosing financials. And we have our non-streamlined, which you don't qualify for a streamlined agreement, meaning you normally owe over $50,000, but you just have to provide financials, and still not too much of an issue to get. It'll depend on the situation. And then we have our partial pay installment agreements, which are if you can't afford to pay everything, all the back taxes you owe by the statute of limitation date, then the IRS is going to require you to disclose financials and figure out a monthly payment amount that works, and then they will forgive the remaining amount once the statute of limitations expires. So just wanted to give a quick overview, since I talk about this with taxpayers frequently and help them negotiate installment agreements. But if you owe back taxes or have any questions about installment agreements, please reach out.